please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back, and it is time now for today's Fast Take. We begin with further evidence that tech is the new Wall Street. Amazon is now the top recruiter of MBA students at Carnegie Mellon, Duke, and Berkeley, the Journal says today. It's hired more Chicago Booth interns than Bain or McKinsey, Michael, and it's hired 1,000 MBAs in the past year alone.
It's a huge assault. I'm not sure they're disrupting the recruitment process. It's just that they're being a little bit more aggressive about the same old recruiting
They're disrupting
game.
Bain's recruiting process.
Yes, I mean, essentially, they're doing it like they do, which is all out. I think I heard from NYU, from Aswath Damodaran, recently saying that he was surprised to see Amazon was their biggest recruiter. It's interesting that MBA candidates, I mean, to me that's always a good sentiment tell. When all they wanted to do was Wall Street, that was the peak.
Exactly.
In the late 90s, it was tech before that.
And so now tech is the new
pretty
Wall
much,
Street.
and Amazon in particular.
Once again. Next, Facebook, speaking of tech, isn't the only tech giant with a fake news problem these days. One of YouTube's top video results for the Las Vegas massacre, a fake story that quickly got over 1 million views. Same for its NFL anthem protest results. So now YouTube is tweaking its algo to try and keep that from happening again, Michael. We know Facebook hiring 1,000 people to filter its ads. Man, you know, the good old-fashioned Wall Street Journals never look better. That's right. I mean, it's obviously a game of spy versus spy, which is the old cartoon. I don't think you're ever going to truly be able to get in front of it because somebody out there always has an interest in trying to game the algorithm and experimenting and testing. And the whole transparency of it and the ability to try as an independent user or advertiser is part of the appeal. At least with a newspaper, you have a defined piece of content they're filling. Sure. If you say, we want to provide all of the content in the world, how are you going to effectively police that? And we're going to buy an ad against a search term that might not exist yet. Yeah. I mean, it's hard to get in front of that. All right, finally today, NFL star Cam Newton has lost his yogurt endorsement deal before I had even heard about the controversy. Apparently last night, and the video is pretty tough, he laughed off a female reporter for asking about roots, he was saying. And then just this afternoon, Dannon dropped him as their Oikos spokesman. Michael, they moved very quickly. They did. Is that in part because Oikos' target demo is females? Yeah, you have to believe that's a huge part of it. I mean, in the commercials that he does, he's in a supermarket talking to female shoppers. And just, I think the fact that it was pretty dismissive. I mean, his comment was just kind of, couldn't be read another way. Is there any way they could have turned it on its head to make it more charitable, to almost have some fun with it, turn those grocery ads into something where he's dismissive of their knowledge of the grocery store? Maybe that's down the road in the kind of backlash to the backlash that might result, but I don't think it's going to be quick. And I guess we heard also that Gatorade put out a statement sort of chiding him but not cutting him loose. Yes, although I wonder if they were more of a female-oriented product. Right, exactly. They're right. There's the difference. Gatorade said Cam's comments were... Dannon is not otherwise an athlete-centric brand, right? That's also true. Yeah. Gatorade says it fully supports women who compete and report on, coach for, or play any role in sport on or off the field. Is it maybe a little over? I mean, the time that it happened. Knee-jerk defensive on this sort of, and you know, especially with social media these days. Exactly. Anyhow, that's we can keep. Okay, we're going to talk more about the Fed at this point. We have a news alert coming up here in just a couple of seconds with our very own Steve Leisman. Steve.
Hey, Kelly, thanks very much. I'm here in Austin, Texas, where Kansas City Fed President Esther George is about to speak. And she will say that further rate adjustments are, in fact, needed. She says that the economy is growing at an above-trend rate, while at the same time, unemployment is running below its trend rate. She says, hey, we should be gradual in raising rates, but they're postponing those rate hikes do pose risks. Earlier today, I got to talk to Philadelphia Fed President Patrick Harker about this issue of low inflation and how it will affect rates. Here's what he said.
There are issues here, particularly with respect to low inflation, because it doesn't give us the leg room we need in case there's a negative shock in the economy. I still have 3 rate hikes in for next year, but again, we'll have to see how the dynamics play out.
He also thinks the Fed ought to hike in December. He sees a 2% inflation rate. I'll get to pose some of these questions tomorrow, guys, tomorrow morning to Robert Kaplan, the Dallas Fed president, who's hosting this conference right here about workforce development, which is about putting people back to work. Kelly?
All right. Steve, anything jump out to you, Michael?
Above-trend growth is an interesting way to characterize where we've been, if that's, in fact, what Esther George said. So, right, I mean, is that what we're talking about when we say 2.8% or whatever?
Trend, 1.5%?
Yeah, so, I mean, that's the one nitpick, but, of course, she wants to get on with things in terms of rate hikes.
All right, Steve, thank you very much, Steve Leisman, for us. Now, a blockbuster New York Times story detailing decades of sexual harassment by movie mogul Harvey Weinstein has sent shockwaves through Hollywood and has mobilized legal teams on both coasts. Julia Borston joins us from L.A. with the latest. Julia?
Hey, Kelly. Well, the New York Times alleges that Harvey Weinstein is guilty of decades of sexual harassment. This in an expose just published hours ago. The 3,200-word article reports that Weinstein, who is CEO of independent film company The Weinstein Company and was co-founder of Miramax, has reached at least 8 settlements with women, ranging between $80,000 and $150,000. One of those settlements was with actress Rose McGowan in 1997 following an alleged incident in a hotel room. The article also details actress Ashley Judd's accounting of sexual harassment by Weinstein in a hotel room 20 years ago. This all paints a picture of a pattern of misconduct. The article saying 8 women shared stories of Weinstein appearing nearly or fully naked or asking for a massage. Weinstein's attorney saying, quote, the New York Times published today a story that is saturated with false and defamatory statements about Harvey Weinstein. It relies on mostly hearsay accounts and a faulty report, apparently stolen from an employee personnel file, which has been debunked by 9 different eyewitnesses. We sent the Times the facts and evidence, but they ignored it and rushed to publish. We are preparing the lawsuit now. All proceeds will be donated to women's organizations. Now, Weinstein himself issued a statement to the Times that undercuts that of his lawyers. His includes this, saying, quote, I appreciate the way I've behaved with colleagues in the past has caused a lot of pain, and I sincerely apologize for it. Weinstein saying he's taking a leave of absence from his company to deal with the issue head on. Guys, back over to you.
All right. Julia, thank you very much. Julia Borston. Time now for a CNBC News update. Let's get over to Sue Herrera. Sue?
Hello, Kelly. Hello, everybody. Here's what's happening at this hour. The Washington Post reporting that President Trump plans to announce next week that he will decertify the international nuclear deal with Iran, saying it's not in the national interests of the United States. The president is expected to deliver a speech next week laying out a larger strategy to deal with Iran. The NRA is calling for additional regulations on bump stocks, which are designed to allow semi-automatic rifles to function like fully automatic ones. About a dozen bump stocks were found in the hotel room of the Las Vegas shooter. And that gunman who opened fire on Las Vegas concertgoers researched Chicago's Lollapalooza in the months before the mass shooting. Law enforcement officials telling NBC News that Stephen Paddock researched both the Chicago Festival and hotels around Boston's Fenway Park. The University of Nevada, Las Vegas will pay tribute to the victims of the mass shooting. The football team will wear specially designed helmets featuring a red ribbon and the words Las Vegas on a black background. That is the news update this hour. Kelly, I'll send it back downtown to you.
All right, Sue, thank you very much. Coming up, Yum China's earnings are out. We're going to find out if the fast food chain was able to see a revenue rebound from last quarter. Plus, we'll tell you how Fannie Mae and Freddie Mac are helping younger people crowdfund a down payment to buy a home. That's still to come on the Closing Bell. Welcome back. Another strong session and another record-setting one on Wall Street today. The Dow adding 113 points to close up at 22,775 as it continues its march towards 23,000. The S&P up 14 points today. It's 8th straight higher close in a row. It's 6th straight record high. It's the first time we've seen a streak like that since the late 90s. 0.5% gain there. The Nasdaq up 0.75%. Even the Russell up about 0.25% today. Now we have an earnings alert on Yum China. Kate Rogers brings us those numbers. Kate?
Hey there, Kelly. That's right. This is a mixed third quarter for Yum China, of course, parent company of Taco Bell, Pizza Hut, and KFC in China, reporting adjusted EPS of 52 cents on revenues of $2.04 billion. The street was looking for 56 cents adjusted on revenues of $1.94 billion. Also, comp store sales had a nice beat at 6%. The street was looking for about 3.3%. KFC comps in particular were up 7% this quarter. They also added a dividend of 10 cents per share. And most importantly, their current CEO, Mickey Pant, he will be moving to vice chair, and Joey Watt will be the new CEO effective March 1st. He's the current COO. The stock is up nearly 4% here in the after hours, and year to date, it is up more than 50%. Kelly, back over to you.
Wow, yeah, that's a big move. Kate, thank you. I was going to say they've gotten off to a bumpy start, though. A lot of choppiness around their first report. Initially, there was absolutely, but I think this, especially year to date, domestic China consumer stuff has been catnip for investors. So it debuted around 25 less than a year ago with the spinoff, now about 40. Wow, and that's Yum China with its earnings report. Now, broadcast stocks got a bump when President Trump was elected in anticipation of a wave of deal-making in the media sector. But the stocks have been struggling. Deals were few and far between so far. Up next, we'll hear from one Wall Street analyst who says now is the time to bet on these names. And we want to hear from you. You can contact the show via Twitter, Facebook, or send us an email. Your best comment. Cable and broadcast stocks taking a dip lower today, as you can see there, as competition ramps up between the traditional media players and the streaming disruptors. Media execs sounding off on this issue at the Vanity Fair Summit earlier this week.
We are also in the business of making sure that we built optionality for consumers by creating an OTT business with HBO Now, in addition to our cable, satellite, and telco businesses. We're growing in all dimensions of our company, and we're continuing to create great content. We want our consumers to have options, and we want them to have options that give them flexibility, and that's why we built the streaming services that we did.
We think there's actually an opportunity to get more economics, but the way to get it would be not just by getting higher prices from the cable distributors and satellite distributors, but also to be able to do different kinds of bundling, and also to be able to take our content direct to consumer, which is something that we're aggressively pushing. Since we own all of our content, we're able to take it direct to consumer.
There's just a lot of change and a lot of uncertainty and a lot of tension that exists between the traditional players in the business, or among the traditional players, as consumers have more choice, as new distributors come into the market, as new producers come into the market. We were confident going into this that the outcome would be fine for us, and I'm pleased to say so far so good.
Well, our next guest is also pretty confident. She sees an upside for broadcast stocks. Joining us is Marcy Riviger from Wells Fargo Securities. Marcy, thanks for joining us. And just start out by saying which companies in particular you think are poised to benefit here.
So we have favored the pure play broadcasters. It's Gray Television, Nexstar, and Sinclair. And there are a host of reasons why we think 2018 is going to be a really good year for the industry.
Such as?
You're going to have the Olympics and you're going to have the elections, which is going to spur overall advertising. There should be deregulation with relaxation of the local ownership rules, which should spur M&A. The Sinclair Tribune deal should close, which should remove a huge overhang. You're going to have continued growth in retrans and net retrans. I think the streaming bundles are going to gain momentum, and the broadcast stations are in almost all of them for a higher price than what they get from the traditional MVPDs. And then we're hoping for some economic reform, which could actually help accelerate core advertising growth.
All right, Michael, she's got me convinced.
Yeah, I mean, I guess, Marcy, your point about the fact that the broadcast station owners should benefit from the skinny bundle movement and then, of course, OTT is interesting. How do the economics break down in terms of the actual stations as opposed to the networks getting the benefit of those skinny bundles?
So the networks make the deals with the over-the-top providers, and then they pay the broadcast stations their cut. And from what we understand, the actual retrans fee that the broadcast stations are getting is higher than what they get from the linear distributors. So it's accounted for differently, but the economics are actually significantly greater.
So, Marcy, when we talk about streaming, we think obviously about Netflix. We've been talking about that all day.
Yep.
But you're pointing to Hulu Live and Amazon channels as part of your argument here. What's that going to look like?
It's Hulu TV, it's YouTube streaming, it's DirecTV Now, and I think eventually it'll be Sling TV. And those are the streaming bundles that sort of look like cable. What I think is really interesting is there are fewer channels in these bundles. So you will be watching those networks on those channels more. And the stations are in there. So they're going to benefit both on the retrans side and on the advertising side. Our point of view has been that broadcast is actually stronger than cable networks. If you look at any retrans fight in the U.S., it's the stations, the broadcast stations, that have the most publicity. It's not the cable networks.
So I might be asking you about names you don't cover, and please obviously just say so, but we quoted earlier executives from HBO, Discovery, and Disney. Where would you stand on those types of companies relative to Nexstar, Sinclair, and Gray?
Well, they're two completely different investment bases. I mean, you have long-term investors in the bigger cap names. You have shorter-term investors in the small cap names. We just came out very positive on Disney. I stand by that recommendation. I think that's our top pick in the large cap media space. Time Warner is being purchased by AT&T. I don't know how that fits into an investment thesis at this point. And Discovery, we've been a little bit more mixed on because it's not included in the streaming bundles. Now, you look at a Nexstar, a Sinclair, and a Gray, we actually have more upside on a shorter term basis if you look at our price targets.
What is the M&A wave going to look like for the broadcast station owners? Is it going to just be kind of horizontal, them getting rolled up together, or will the CBSs and Foxes that own some stations as well be buyers?
I do not believe CBS and Fox will aggressively be buying any station. In fact, Fox has been known for potentially spinning off its TV station, so I don't expect them to be a buyer. CBS may be interested in specific markets, probably AFC markets, but that may be one or two. In terms of the station groups, I don't expect huge transactions. I do think with relaxation of the local ownership rules, you could have a lot of swaps, and what that does to margins is it increases them by 10 to 15 basis points. It's tougher to value, but from an economic basis, it's a really good transaction.
Marcy, let me circle back to Discovery for just 1 second. Then you mentioned they're outside a lot of these bundles, but they have made a move for Scripps here to kind of beef up their own programming. So do they need to offer a standalone over-the-top product? Do they need to become integrated? Are the risks bigger for them?
I don't know that they need to do a direct-to-consumer product. I really think Disney and CBS have uniquely positioned themselves to be successful. What I think for Discovery, we're going to see how this non-sports entertainment pack goes whenever it is launched. I think that's what they're sort of counting on.
All right. Yeah, we could get into sports. That's a whole other topic. Marcy, yes, for now, we'll leave it there. Fascinating, and I'm not just saying that because I work in this business. It's a great point. We thank you for joining us.
Thank you very much.
Marcy Ryvicker from Wells Fargo. Prospective homeowners, pay close attention. There is a new way to make a down payment on your home without using your own money, and it's backed by Fannie and Freddie. We'll have all the details on it coming up. The majority of millennials say they want to own a home, but many can't afford a down payment. One mortgage lender has come up with a new way for them to get over that by coming up with cash from other people. Diana Olick is here with those details. Diana?
Kelly, the answer is crowdfunding. Look, millennials crowdfund everything from businesses to products to charities. Why not the down payment on your home? Well, until now, lenders wouldn't let you. Down payment assistance was limited to close family members, employers, community nonprofits, or your church, and all had to have significant documentation.
This is different. This allows you to tell your story. It allows for folks to be able to buy in to the story of what it is you have, your loan story, your home story. And one of the things our tagline is, fund your way home.
CMG Financial, a mortgage lender, is launching Home Fund Me, the first online platform that gives home buyers a way to both market their needs and receive multiple small tax-free cash gifts from anyone to finance the down payment on a home. And this pilot program has the blessing of Fannie Mae and Freddie Mac, which finance the vast majority of mortgages today.
What we're doing today is we're trying to test and learn a variety of solutions because the preferences for today's homebuyers have changed significantly, and there's no silver bullet to solving a problem that's as hard as how do you find a down payment.
So the idea really is to link this to, your wedding and your baby registries, and in some cases add to the savings that you already have, which could help you avoid higher interest rates and mortgage insurance. Interesting idea. Kelly, no?
Yeah, the biggest surprise to me is that Fannie and Freddie are already backing it, Diana. I guess there's no reason they wouldn't if ultimately it's going to result in a conventional
program,
mortgage.
They said.
Yeah, but
right.
Why does this need their
said that
perimeter?
They're trying to help. Well, they want to be able to help. They realize that millennials have a problem getting to that down payment, especially as home prices continue to rise and they need bigger down payments. So they're test piloting the program. This is not all for one and one for all. They want to see how it works. They want to see how the loans perform. They want to see if the millennials or anyone, it's not just millennials, but if anyone can really get their friends to finance their down payment. I mean, I don't know. It's a wedding gift, sure, but if it's beyond that, who's going to give you the money? I don't know.
Michael, I think it's kind of brilliant.
It is fairly brilliant. I mean, I think it should come with, rights for visitation whenever you want. I mean, you can negotiate the terms of the contribution to the down payment.
Okay, you're so nefarious.
How many times am I coming over for a barbecue?
I just like the pumpkin
I had
on the
one
porch.
issue with it,
Go ahead,
though. What about the issue of skin in the game? Let's raise that, though. My question is, if during the foreclosure crisis, when prices went down, a lot of people walked away because they didn't have skin in the game. They had no down payment loans. They were maybe in a negative equity position. What's the argument on skin in the game? Yay or nay?
Well, because you're going to have to deal with Mike Santoli saying, where's my money? I mean, to me, that's almost more skin in the game. I'd be horrified if not only it was my money, but if it was someone who had given it to me.
Yeah, although the record of loans among friends and family are not perfect.
Yeah, that's a good point. These are very good points.
The return is their happiness.
Yeah, we have much more to unpackage here. Diana, thank you very much. Our Diana Oleg. All right, you emailed, Facebooked, and tweeted. Up next, we are going to read some of your messages in the Closing Bell mailbag. Here, oh boy.